Is right now in 2024 the worst time to buy a house?
If you're ready to purchase, I think you just need to get into a property. Everyone was talking doom and gloom 2 years ago when COVID hit. So you could get away with putting in no deposit.
Can you expand on that?
Yeah,
That's crazy.
I can elaborate on that. When I noticed that the personal referrals I was getting just from people recommending people to myself, when I noticed that that was overweighing the referrals that Aussie Home Loans was giving me, I knew at that time it was time to go out on my own.
Yeah.
So that kind of sparked me into starting my own business. So no, I don't think you have to be, maths A genius to be able to do mortgage broking.
Welcome everyone to episode number 5 of the Just List podcast. Today is a very special episode because we have our first non-real estate agent guest on the podcast, the first of many to come. I've decided to now switch things up and speak to all manners of cool people that I find interesting in this space. So today we have the director and CEO and founder of Tora Finance based here in Brisbane, Mr. Jonah. How you doing, man?
Good. Yourself?
Awesome.
Thanks for having me.
Thanks for being the first non-real estate agent guest in our podcast. Hopefully we can get chatting about some stuff that I find quite interesting, that these guys find quite interesting. But yeah, for those of you who are not so familiar with Tora and basically what you do, what the operation is here, give them like a quick rundown of what it is that you do.
Yeah, awesome. So we're mortgage brokers, residential mortgage brokers.
Mm-hmm.
We also do commercial asset finance. So anything finance related is what we dabble in.
Mm-hmm.
Been doing this for 10 years in finance, so a lot of experience behind us.
Awesome.
Have a team of 6 and fastly growing. So
Nice. A team of 6 now. Yeah,
Yeah.
awesome. Oh, cool. So basically, when did you originally get into, being a mortgage broker as a career? What was the point where you decided?
So after school, I knew that I always liked finance.
Mm-hmm.
I went to university, studied economics and mathematics, basically. From there, I wanted to be a financial planner. So I went to the bank and I applied to be a financial planner.
Oh, okay.
They, at the start, made me start as a branch teller, and slowly, I worked my way up.
Right.
And from there, I started doing home lending in the branch.
Mm-hmm.
When I did home lending, I realized that I had a passion for helping people out. And from there, it just sparked into, me helping people purchase their homes.
All right.
After I started doing that, I knew this is where what my calling is, and I'm supposed to be in this space, and I just stuck from there.
Right. So what was that like, though? Because you went in wanting to be like a financial planner and stuff.
Yeah.
But that's not exactly what you got into.
Yeah.
So what was that phase like? Did you like it? Did you still enjoy it? Or was
Yeah, no, I do enjoy, I see how financial planners work, and I do respect what they do. I think it's more, I feel that people want to talk to a mortgage broker a little bit more. It's one of the biggest purchases they have in their life, and they're more accepting to you just speak to them.
Yeah.
Basically, where I feel financial planners is very niche. Only certain people who are at a certain stage in their life want to speak to a financial planner. So that's why I kind of transitioned into doing mortgages instead.
Right. So you prefer just like being able to help as much people as possible.
That's right.
Yeah.
Yeah.
Hustle and bustle of not really like niche down sort of clients.
Yeah, exactly right.
Cool. Gotcha. And speaking of people and mortgage brokers, I've gotten this question a lot, and I clearly am not educated enough to answer it. So that's why I wanted to ask you, which is, why do we need mortgage brokers in the first place? Can't we speak directly to the banks ourselves?
Yeah. So the way I like to put it to people is there's 50 plus lenders out there. Every lender has different policies and niche clients they're looking for. So it's impossible for you to know, as a person wanting to purchase a property, what bank is going to suit you best. So it's our job basically to find that. So the amount of policies out there for us to learn is actually overwhelming. So being in the industry for so long allows us to place you into those right lenders. You may get a lender one day that is offering a really low interest rate. You may get a lender out there that's offering cashback offers for you to purchase a property. So it's impossible for you to just know what they're offering. So that's our job, to kind of place you to the right lender that suits your needs, basically.
Yeah, okay. So you mentioned it's pretty overwhelming, like for an everyday person to go to 50 plus vendors and sort of get the pros and cons of each one and then make the decision. Um, but how do you guys sort of stay on top of it? Because it seems like, and even for like a team of six, it's
Yeah.
pretty crazy. Especially before you even started this thing, like by yourself, that must have been pretty crazy.
Yeah, there's a lot of compliance as a mortgage broker. So every year we're supposed to do a certain amount of study with the different lending policies and changes that are in the industry. So as a requirement, we're supposed to have a certain amount of time where we learn all the products. We get banks come out, visit us, telling us updates on their products, and then we push that on to our clients. So we're always up to date. It's like a big necessity to be on top of what the lending policies are.
Right. Is that like a go-to method that you follow to sort of keep
Not-
up to date with everything?
Yeah, not really. I just make sure to get all the lenders in as much as possible, and also just stay current with the market. Like, follow the news, follow articles out there, follow what the Reserve Bank of Australia is doing with interest rates. Just stay on top of
Yeah,
it.
it seems to be talk of the town.
Yeah, that's right. That's right.
So when it comes to just everyday people, right? So people that are your customers, basically, what can we do to sort of keep ourselves updated with the market? I mean, we might not be buying or selling or doing it, refinancing or anything like that anytime soon, but just your advice as someone who's like in the game, on the ground, getting all this information up, like straight away from the source. What can we do as like everyday people to sort of stay educated and updated with what's happening in the finance world, what's happening with banks, what's happening with all the interest rates? Like, what can we do?
Yeah, I think staying current with the news, that's big. Following certain influencers as well that are big in the areas. I know YouTube these days is a big place to get a lot of education out there.
Yeah.
So find that influencer that really resonates to you and follow the information they tell. Other ways is the professions you have. If you have a financial planner, a mortgage broker, an accountant, go to them. Arrange those yearly meetings and tell them to keep you updated on what is out there for you. And if you do that, you'll I say knowledge is power. You
Right.
have the ability to do whatever you need to do going forward.
Right. Okay. Awesome. So, from I guess going through the bank route, becoming a teller, and then slowly working your way up, and then the first few times that you've successfully, closed deals as a broker, what was that like? How was that experience?
I'll be honest with you, at the start, I was very nervous as a mortgage broker. I feel like I can speak to people pretty easily, but the nerves at the start would get the better of me. Slowly, the more appointments I had, the more deals I closed. I started getting confidence in what I was doing, and then it became second nature.
What scared you initially?
I think it's the knowledge maybe. So at the start, you're dealing with the biggest purchase of someone's life that they're dealing with, and thinking that there's so much information out there to tell that person, and if you stuff up, it can be very costly to that person. I think that was the area that really makes you nervous the most. But yeah, shortly after that, I reckon 1 year in, and I felt like I was on a professional after that. Yeah.
Awesome. Because that's very interesting that you bring that up, because I didn't really think of it that way. Like, because for like someone from the outside, finance is just like one of those industries where we all have to like interact with you guys at one point in our life. But from your perspective, like if you stuff up, it really is like someone's biggest financial move that they're making in their life.
That's right.
So that pressure must be insane.
It is.
So for people dealing with that kind of stuff there right now, like emerging up and coming mortgage brokers, or just people dealing with that kind of pressure, what did you do to really just balance yourself out and still be able to do your job properly?
Are you saying from a perspective of myself?
Yeah,
Like, what do I
yourself.
do for my clients to make them feel at ease? Are you saying?
For yourself as a professional.
Yeah.
Because for you, I mean, they've always got options, right?
Yeah.
Like your customers can either
Yeah.
go to you or like someone else, and there's no shortage for mortgage brokers. But for you, like this is your shot at a customer. This is your shot at helping someone.
Yeah.
And you don't want to stuff it up. So that pressure must be massive.
Yeah.
So how do you deal with that?
Pressure is massive, but the one thing I like to put myself in pressure, and I feel like it makes me operate better.
Right.
I just keep putting myself in it, keep immersing myself in the field, it's uncomfortable, but I just keep doing it. And with time, it just relaxed me and became second nature. So that's my recommendation to anyone.
It's just jump in.
Just swallow that pill and jump in. That's it.
Awesome. Okay. Because that seems to be like a trend that I'm seeing a lot among people that are very high performing and like really that got very far ahead in their profession, is that they kind of like, even if they're scared, they don't spend time deliberating and they just sort of went for it without really planning it out too much or anything. As long as your basic knowledge on the craft of what you're doing is correct, I think we do get caught up a lot.
Yeah.
In the different possibilities of how we may stuff up.
I think if you know what you're doing, like the scariest thing is not knowing what you're doing. So when you get that knowledge, it makes it so much easier for you to be confident, and people read the confidence from you. So the longer you do something, just naturally you progress over time.
Right. So you mentioned that coming into this field, you've always wanted to do finance. Now, anyone dealing with mortgage brokers or anyone wanting to be a mortgage broker, one of the biggest questions that we've sort of heard around is that, I'm sure you have to be good with numbers, right? Like you have to be like a numbers guy, like A+ in maths kind of thing. Is that the reality? Is that what you need to be to get into this field?
It's not that complicated. I think it's more, there's calculators to calculate everything these days. It's more simple maths, like problem solving. When I say problem solving, it's more, it's like a puzzle. Like someone will come to you with a big scenario and you just have to be able to sit the person down, break it down and be able to come up with a solution for them. So no, I don't think you have to be, maths a genius to be able to do mortgage broking.
Right.
I feel personality is the biggest thing you need as a mortgage broker.
Interesting. How come?
Personality, people want to trust you. So I find that if you're genuine, like you don't, with real estate agents, with mortgage brokers, the people that have dollar signs and they're after that commission, people read that off you straight away. Whereas I think the approach that I've taken is I literally want to help that person out. I'll do anything to get them into that property, and people see that resonate off you. And it's just when you're not chasing the money, it just business will naturally come to you.
Right. Okay. Yeah, that's another theme that's very common amongst people who do well. It's just fixating on the customer and sort of making them the priority. That's awesome. So has this always been a thing, like you wanting to just help out people as your profession? Because it's not something that you hear a lot in the professional world. It's like, oh man, today I'm just going to go out there and help people. You didn't hear that a lot. But was that the deal with you, or did this switch happen somewhere where that became your priority?
No, I think I've always liked to help people. Like I've always been giving in nature. It just kind of naturally happened. I think that first deal, like we were saying before, the first deal I closed, and I saw how happy that person was to purchase their first property. It created a bug, and after that, the sky was the limit. I just kept pushing and pushing.
Nice.
After
So
that.
that got you hooked.
That's right.
That first reaction.
Yeah.
Awesome. And probably a nice segue into this. Another big question that we get, that I also got confused with before I got myself involved with the space, was that it's really like when you say you want to help people, it's like almost exactly like you can buy that, because none of the people you help are actually paying you. And then we see that all the time with mortgage brokers, like you're making money, but we're not paying you. So like, how do you get paid? Like no one understands like the back end of the business. So how do you get paid?
So
how does that work?
Basically, the bank pays us a percentage for bringing the business to them. It's like a kind of finder's fee. So what a mortgage broker is basically doing is they're cutting out the branch, the home lender in the branch, and the mortgage broker is sitting there and they're writing the whole application. So what we do is, as mortgage brokers, we send the application straight to the bank's credit assessors. So we've cut out the middleman there now. So for doing that, the bank is paying us a percentage of the loan amount. It doesn't affect your interest rate. There's no extra fees at all. So it's a no-brainer. Why would you go direct to the bank when you could go to one person who knows all the different lenders' policies and who has a much higher chance of getting you approved.
Right.
So yeah.
So why do you think, like that seems like such a no-brainer. So why do you think people are still sort of skittish and think twice before going to a mortgage broker? Is it more about the individual mortgage broker, or is it about just lack of awareness of what's going on?
I think it's lack of awareness, and with time, if you look at the stats, year on year, more and more people are going towards a mortgage broker. I think years ago, like 5 years ago, it was like 50% of people were using the bank and 50% were using mortgage brokers. I think it's higher than 70% of people now are using a mortgage broker.
So wait. So you mean back in the day, people would just like go to one or two banks and be like, all right, that one's a good one. And
That's
that
right.
was it.
Yeah.
So they didn't check like any of the other options
No.
out there.
And I think they thought the banks have more loyalty. Like if the customer was there, they would look after them more. But it's literally, if you don't tick some boxes, the bank won't accept you. So that's literally how it is.
Oh shit.
Yeah.
Okay. So people, I guess, were more trusting back then.
That's right.
In the banks, but now clearly a higher percentage of people are using it. What do you think changed?
I think what changed is lending's getting harder. Property prices are going up, and it's getting harder and harder to get approved for that property. So what's changed is the approval rate. If someone wants higher chances of approval, you go to a mortgage broker, and 9 times out of 10, they should come up with a solution for you. If they can't get a solution for you, they'll tell you what to do in 6 to 12 months' time to get there. So I think that's the difference. Better customer service, kind of a no-brainer, basically, no-brainer.
Awesome. So once you started getting, you've had your first few deals closed, you're starting to help customers, and then you're on this role. And clearly you're doing well as an individual. I'm assuming you were working for another firm before this.
Yep.
When did you realize, like, all right, I'm going to go out on my own, or I'm going to start Tora, for example? How did Tora come into being?
Yeah, so when I was working for Aussie Home Loans before here.
Oh, really?
Yeah,
Okay,
so
awesome.
Aussie Home Loans, I was writing loans for them. The model of Aussie Home Loans is that they give you referrals. They give you people that are looking for home loans.
Yep.
When I noticed that the personal referrals I was getting just from people recommending people to myself, when I noticed that was overweighing the referrals that Aussie Home Loans was giving me, I knew at that time it was time to go out on my own because I've created my own brand at that time where people were following me.
Yeah.
So that kind of sparked me into starting my own business.
Okay, because a lot of people dream of that sort of a scenario where, you're getting business just from word of mouth, from people referring you, which is fantastic, which is what anyone in any business wants. It's free customers, basically. Yep. And it's a testament to how good you are at your job. So what did you do, I guess, to get to that level where people were going out on their own and saying, like, hey, you should check this guy out. He had an awesome job for me. Like, what do you think is a difference between getting referrals and building your personal brand just through your work versus someone who still does the work but is not getting referrals? So what's the gap there?
I think communication is one big area. People want you to communicate with them and care. And second thing is results. Like I will do everything I can to get that person approved or past the line. If it's not right then and there, I'll tell them how to get there in the short term. So I think, like, going back to what we were saying before, me caring about what happens to them is how people recognize that and started referring more and more people to me, which created a big pipeline for myself.
Right. And who did you have any sort of pattern where, you helped X people achieve Y? Was that like a specific sub niche that you did very well in, or were you just helping anyone that came through the door?
So we get a lot of self-employed people. Self-employed people struggle a lot with their finance because when you're self-employed, you're trying to avoid paying tax. So us having knowledge, we're able to take you to the banks that we know that you'll get approved with. So self-employed people is probably a specialty for us. And also first home buyers, like we like to sit down with the first home buyer and guide them through the process and explain everything to them. You may get mortgage brokers out there or if you go to the bank, they don't explain things very well to that first home buyer, and the first home buyers are the most nervous people of all. So it's just really important to give them as much information as possible.
Okay, so those two were like, I guess, your standout areas, like the
Yeah.
people that you help the most.
That's right.
Is that still the case?
It's a mix now. I have a big mix of clientele. I think because I've been doing it for so long, but purchases are still my number one form of business coming
Right.
through.
The
So
residential sort of.
owner occupied, people are wanting to purchase their owner occupied property is still the number one. And then investments after that. Refinancing has dropped down a lot. People aren't they are rate savvy now, but I think they're locked in with their banks now. They're not moving around as much. They're just staying put. Yeah.
Okay, awesome. So going back to, realizing that your referrals and your personal brand is getting big, and then you realize it's time to start a business. So as business owners, we know that one of the hardest things you can do is to quit, the nice paycheck that comes every month, or quit the nice support you have from a big company to then completely go out on your own. So was that daunting for you?
With me, when I started at Aussie Home Loans, it was commission only. So I was getting paid. If I didn't write any deals, I didn't get paid at all.
Right.
So me going out on my own was more of a no-brainer than me being at Aussie Home Loans, because Aussie Home Loans was taking 50% of the commission at that time. So me going to Aussie Home Loans, going commission only, was definitely daunting. I didn't think I could do it, but I think I started young, so I had less overheads. My recommendation to anyone that's looking to get into the industry is do it while you're young.
You're right. How old were you?
I was 20, I think I was 25 at the time
Oh,
when
wow.
I jumped
Okay.
in.
Yeah. Right.
But now if I had a family, kids, it would be much harder for me to do that.
Yeah. So it's easy to risk things and just go for things while
That's
you're younger.
right.
Cool. So coming into that initial job was more daunting than leaving that and starting Tora, right?
Yeah.
So I guess when you were starting out, it was just you. It's like a one-man mission. So how did you build a team? How did all the 6 people here, the office, everything come into place?
I was so busy at Aussie Home Loans. I had a line of people waiting for me to do their home loans that
Oh, damn.
when I stopped at Aussie Home Loans, I transitioned straight into the business, and I had like 20 to 30 applications I needed to do at that time.
Yeah.
So I had to hire someone straight away. Like it was the best educated decision I made. I felt there was little risk at that time, just because I had backed myself and I had such a good following at that time.
So when you're hiring someone, how do you know that this is the right person? Because I know personally, like, a lot of people who come into business, they start off by themselves, and then they get really good, and then they're at that position where, like, all right, if I want to keep growing, I need to hire someone. But then there's the whole problem of, like, is this the right person? Is this the right fit for the company? Are they going to be as good as me at doing this task? That whole thing. How did you manage that, especially with the pressure of all these people lining up outside trying to get you to do this for them?
Yep.
So how did you manage that?
It's not easy hiring people. I think doing background checks on people is very important, and personality as well. Like with our team, we have a young team dynamic. Like everyone's very similar personality wise. So I wanted to get people in the business that align to us and the brand and stuff like that. But all I can say is background checks is very important, because you may get along with someone, but their work ethic isn't the best. So I just really recommend checking in on that person, their history.
Have you had to fire people?
No, not so much fire, but I think naturally people may leave the business on
Sure.
their own. Like if they're feeling they're not up to the same standard as everyone else, naturally they weed themselves out. It's hard to be cutthroat, like especially when I feel like I'm a caring person. So sometimes I don't want to break the bad news, but sometimes it needs to be done.
Yeah. So when you're flipping that around, then what do you look for in a person where you're like, yeah, that's the winner, like that's an A player right there?
I think passionate people that well-spoken, hardworking. You can just tell straight away when you meet someone, you can judge them in 5 seconds
Right.
on how their work ethic is. So you usually get a good feeling from the start, and then I guess that's what probation is for. You put them in the environment and
Yeah.
you see what happens after
Yeah.
that.
So
But
there is an element of trial and error to it.
100%, 100%. It doesn't work out like perfect, and you wish it did, but it doesn't.
Yeah. Okay. Awesome. So I'm assuming once the team is starting to grow and grow and grow, is your primary lead gen source still just referrals?
It's existing clients, referrals, some in marketing, like in social media presence, but mainly referrals. I would say, yeah, that's the
Right.
main
Awesome.
area.
So you would have gradually then seen a change in referrals coming in. Whereas earlier when you're doing it by yourself, had a bunch of first home buyers and self-employed people coming in. But now it's sort of a good split between investors and just people looking to buy their home. So why do you think that switch happened as time's gone by? But also, how has that impacted your team, and how's the team sort of helped you?
Yeah, I think the clientele has changed because those initial first home buyers have turned into investors that are purchasing multiple properties now. So
Oh wow! So you have investor clients now that were back in the day your
first home
first home buy
buyers,
client.
that's right.
Oh wow! You've seen like the full
Yeah,
360.
the people's situation changes a lot. So they may be struggling to purchase their first property. All of a sudden, they get a new job. Their income has increased so much, and now they're buying property after property. So we get that. Like we like to help someone from the start, and then help them through their whole journey.
Right.
Yeah,
Okay, so that's another thing that I found quite interesting was I got a feeling that once you find like a good mortgage broker, then that's someone who's spent so much time understanding your situation, what you're after, that it's easy just to stick with them, right?
that's
So do
right.
you sort of see how do you see customers? So do you have their whole like plan in mind when you're approaching them? Like this guy wants to do this now and 5 years later he might also want to like do something else.
Mhm.
So do you have that whole thing in mind, or do you approach each one case by case?
It's more case by case, but we like to check in with our clients year on year to see how they're going. And during those conversations, they'll tell you what they want to do with their next move. So we just like to keep in constant contact with them. But yeah, that's probably the main area how we
Right.
figure it out.
Awesome, man. Well, now that we've sort of got an idea of what it is that you do here at Tora, the second half of this podcast, basically, we've curated a bunch of questions, some of the most commonly asked questions about what you do and how you help your clients. We've asked people in our friend circle, our followers, and this is what we've seen come up most frequently. So this is stuff that needs an answer from an expert because there's a lot of bullshit going around on the internet. There's a lot of fear mongering, and there's people like no matter who you are, they're not going to trust you. So judging from someone who is not going to take money from me, um, someone who does this for a living, someone who's an expert, someone who's clearly having success in their business, we thought you're probably the best person to ask right now. So first of all, we're hearing very much, all doom and gloom about the market right now. So is right now in 2024 the worst time to buy a house?
I feel you can't pick the market. If you're ready to purchase, I think you just need to get into a property. Everyone was talking doom and gloom 2 years ago when COVID hit. If everyone sat back and didn't make moves, no one would be in the positions they are now. The market has exploded. So, for example, I purchased a property 8 months ago, my second property, and it's gone up already 150,000. So I think trying to pick the bottom of the market is hard, or trying to pick when a crash is going to happen. Better to get in it, and eventually with time the market always will increase in value. So if it does crash, it will be short-lived. After that it will quickly recover after that.
But what about people, especially younger people who feel like they just cannot afford a house now? Because especially around the Brisbane area, we've seen crazy growth over the last 2-3 years. But there's also the case of wages not growing as fast. and there's, high interest rates. Houses that, a few years ago were worth like 600, 700 are now going for over 1 million. So naturally, this creates a lot of fear and anxiety in people, especially younger people who are trying to, make a move in the market. But things just look so far out of reach that they don't even know whether they'll be able to. So as a professional, man, like, just honestly, like, what is the reality? Is that true? Like,
It's definitely getting much harder for people to get into houses, and it's just going to get tougher and tougher. But I think people need to get out of their head that they need to live in the property that they purchase. You can purchase a property and make it investment and rent it out to someone else. Go out further, purchase in another state where property is cheaper. As long as you're getting in the market, once you get in the market, it's easier after that to expand your portfolio. So I think, people need to stop trying to get in their head that the property they purchase is where they need to live. Just get into the market, whether it be anywhere.
right. So you think, for example, let's say, I just recently graduated. I want to, buy a house in Brisbane to just live. But I can't afford one right now. So you think it might be better to just purchase somewhere and get into the game rather than sit and wait for me to find a property that suits me here?
That's right. Like, for example, myself, I'm renting an apartment in the city. I love where I am. I don't want to move out. And I've purchased other properties. It's a good strategy to do that, especially people who are in university or they've just gotten in the workforce. They're living at home with parents. While you're doing that, make the most of your low expenses. Get into the property market, rent it out, and then after that, when you're ready in 2-3 years' time, you have a family now. You will have a lot of equity in your property, and you can use it to purchase another property after that.
And speaking of rent, that's another thing that's getting really, like, just cooked now. Where back in the day, you could, like, rent out an investment property and, well, there's a whole, like, negative gearing sort of tax sort of area to it, which we won't cover. More so, like, you could genuinely just make a profit on the actual rent. Whereas now it feels like rent is so high where people are like, why not just pay the mortgage then? Like, people are getting to that level. Like, how is this even going to cover the mortgage? So do you find that affecting the industry?
Yeah. So there's less investors now because the rent they're getting is low compared to what the mortgage repayments are. So a lot of people are out of pocket a lot of money when they're purchasing their investment properties. It is cheaper right now to rent rather than to purchase a property. The repayments are so high at the moment. All I recommend to people is don't overstretch yourself. Purchase what you can afford, but you just need to get into the market. Like in cities close to Brisbane, doesn't have to be in Brisbane, the rental yields are higher. Property are more affordable. So try to get yourself into those types of properties.
Okay. So basically, well, let's just go through a scenario, and I want to see, like, what your expert recommendation is. So let's take the classic example of, like, most young people right now. You're out of uni, you're anywhere from like 30 to 70K in HEX debt. You've got a job, which is, you're doing pretty well. The job is stable, but that's your situation now, and you want to get into the property market and let's just make it even easier. You're living at home as well. So that's my situation. What is my next moves now to secure a property?
I think first thing is go speak to a mortgage broker. Like, if you're not ready at the moment, at least find out what needs to be done to get into that property. There's so many different avenues for people to get in. Like, parents can own property. You can do guarantor loans. So what that means is you're using your parents' property to borrow against the property you want to purchase. So you could get away with putting in no deposit. So that's a good strategy in itself.
What? Okay.
Yeah.
Can you expand on that? That's
Yeah,
crazy.
I can elaborate on that. So basically, if you use your parents' equity in their home to purchase a property, the bank will allow you to borrow 100% of the purchase price plus all the costs. Yes, your mortgage repayments are going to be high because now you're borrowing the 100% of the property, and you're not putting in a deposit, but it allows you to get into the property. While you're living at home and you're paying no rent, purchase that property and you can rent it out to someone else. So you're paying no deposit and you're getting a property that's earning you income if it is positively geared. But that's a good strategy to get into the market, and your outlay will be very low because your expenses at that time should be very low.
Yes. So that's awesome. So let's check out another scenario where, let's say, parents are into the picture and you're just so one-man mission, like you're trying to just do this thing yourself. So in the same situation, without that, then what would you recommend?
I would recommend, there's a lot of first home buyer incentives out there. There's the home guarantee scheme, which is you can put in a 5% deposit and the government will waive your lender's mortgage insurance for you. The way they do that is they guarantee the property. They're like your guarantor. So the bank waives the lender's mortgage insurance in that case.
Right.
So people can get away with putting in little deposit. Second area is the first homeowner's grant of $30,000. To get that, you need to purchase a brand new property that no one has lived in before.
Okay.
So brand new property, either you can do a land and build, or you can purchase an off the plan property that no one's lived in. And if you do that, there's $30,000 right now. So those two combined, you can get both of them at the same time. So I've seen people get away with putting in as little as like a $10,000 deposit, a $5,000 deposit. So there are ways to get into the market. It's just you might not be able to purchase in those inner city suburbs that you wanted to back in the day.
Okay. So does having a HEX debt, though, will that affect how much you can borrow?
Yeah, so the way they calculate HEX is a percentage. So the more income you earn, the bigger the HEX repayment will be. So the bank will take that into account. If you're earning 60,000, for example, your HEX percentage is very low. If you're earning 200,000, your HEX repayment is going to be very high. So it can affect your serviceability a lot.
So, like, what's better? Would you be more likely to get a loan if there's less HEX payment or more HEX payment?
So more HEX payment is going to jeopardize you getting that loan. We often say to people, if they've got money sitting there and it's affecting them getting the loan approved, we say just pay out the HEX if you can. Some people have a $50,000 to $100,000 HEX debt though, so it's not as easy for them to do that. So in those cases, yes, it will affect you. But yeah, I guess that's what for us to figure out on how to get you past the line.
Oh, okay, cool. So you're saying there are ways in which, you can still get into the property market and you still borrow money without, just sitting and waiting until you can pay off your entire HEX.
That's right, yeah. And I see most people leave the HEX debt there because the HEX debt, I think now they've capped it at 4%.
I think so, yeah. Like the recent updates where they're going not as crazy with the rates. They're actually like, I think they're like bringing it back a bit and sort of doing like a little refund thing where based on how much you owe, like a certain percentage of it is being now refunded to match that 4% sort of mark. Yeah. So that's that's great news, but still, people sitting there with 50, 60, 70K in debt. So you're saying there are options for them to still purchase a house without the HEX affecting them that badly.
That's right. There's ways to get rid of it altogether. But if it is really affecting the borrowing capacity and they can't pay it out, it will affect how much they can borrow. So they're just going to have to come up with another plan, whether they purchase it an investment property so that the rental income can offset how much they're losing to the HEX payment.
Okay.
Other strategies like that.
So there's ways around it.
Yeah,
what you're
there
saying.
is. There is.
So the chances of a bank going absolutely there's no way around it is not as high as you'd think.
That's right. I'll tell you this, the bank never just declines someone. They usually will say, this is the amount we're willing to let them borrow. So with that information, you can go out there and search for properties.
Okay.
Yeah.
Right. So your limit might be different, but you still might be able to
That's right.
do this. Okay. Awesome. So my next sort of question is, once, let's say you've paid your HEX off, and now it's pretty much, as a young person, it's like open game, like you can buy wherever you want to. What recommendation would you give them on how to get into the property market? And basically, how do you get started?
Yeah. There's so many other professions out there. I know for myself, I'm a busy person. I like to use a buyer's agent to go out there and find a property for me. So a buyer's agent is someone who represents you and goes out there and negotiates with the other real estate agents that are selling. Not all people have funds out there just sitting there ready to give to the buyer's agents. Other avenues, I can say, go to the open homes, do your research, do your market research, do comparable sales. There's so many websites out there that you can compare what the growth is on that certain suburb or what the sales were in that area. So that's another really important area. So just go out there, do as much research as you can.
And on that topic, and as someone who's just purchased, your second property, what do you look for in an area to sort of know that, okay, this place is going to appreciate, like this is going to be a good investment?
I think as long as it's close to schools is important. It's got amenities around the place. I think that's really important. I feel that we're from Brisbane. I feel anywhere from Sunshine Coast to Brisbane to the Gold Coast, anywhere between there is a really good purchase. So,
Oh wow, that whole stretch.
yeah, I would say because it's got close to the highways. It's got there's a lot of little pockets opening because no one can afford Brisbane in itself anymore. So everyone's moving out to these other areas. So these areas are developing very quickly. We're finding that a lot of new clients are having to move out further and further. So I think don't set your mind on a certain area. Be adaptable to move to other locations if you have to.
Yeah, awesome. Okay, interesting. Because I always see a lot of people getting very, stressed about, oh, where do I buy? What's a good place to buy? So you're saying Brisbane in itself is positioned in a way that if you buy anywhere between Sunny Coast and Gold Coast, basically, it's likely to grow.
Yep.
Right. Okay, awesome. And let's say, another common question that we get is people in similar positions when they're going out for their first house is, how much do I need to save up to afford a house? I know it's a very generic question. Like, it depends what house and how much you want to put down. But that's a question that we get. So if someone asks you that, how do you respond to that?
So I think main thing is 5%. You need to come up with a 5% deposit of whatever the property is you're looking to purchase. So $1 million property, 50,000, that is. Then you also need to cover the stamp duty, their government costs that are put on top of that property. So that's the minimum you would need to contribute towards a property.
Right.
And like I was saying before, you could get away with not putting in any deposit, but you need the guarantors or you need that other property that you own. Like if you own a property already and you want to purchase another one, you can use the equity in your existing property to purchase the next one. So there are other ways to get around it.
Okay, so 5% is almost like the golden rule that you go for. So why 5%? Because I know a lot of people try to put 10%. So what's the difference between that? Why are you going 5%?
5% because most banks will cap how much you can borrow at the 95% mark. So most banks will allow you to borrow 95% of the property value. So with that rule being said, 5% is usually what your contribution will be. Some banks will borrow above 95% of the property value. They'll let you borrow up to 97%, some of them. Lenders' mortgage insurance at these levels are killers, though. Their fee is very high. So that's something we need to factor in.
How much would that be?
Let's say you were purchasing a $500,000 property, you borrowed 95%, you would probably be paying anywhere from 10 to 30,000 in lender's mortgage insurance,
right?
Which would be capped on top of the loan. So it's added to your loan and it's repaid over 30 years. So you're paying interest on that lender's mortgage insurance.
Right. So you're paying interest on that as well.
That's
so
right.
Eventually ends up being like a much higher figure.
That's
I'm
right.
assuming. Cool. So, but I hear that there's schemes and grants out there now where you can avoid LMIs, avoid stamp duty, which is, I think, the first home buyers grant.
That was the home guarantee scheme, that one. So the home guarantee scheme is that 5% deposit you put in and they waive that lender's mortgage insurance for you.
Right.
Only for first home buyers though.
Yeah. Okay. So how does the general like first home buyers grants and stuff work? Or first home buyer and first home builder as well?
Yep.
So how do they work? What sort of perks do they offer?
So if you do a brand new property, the government gives you 30,000. That 30,000 can be used as your deposit to purchase the property.
Gotcha.
So basically what happens is we will fill out a form for you and we send it to the bank, and the bank will process that payment. And when the slab stage of the build is being formed, the bank will pay that 30,000 towards your deposit, basically.
Yeah.
So it's very handy to have, and I recommend anyone who's looking for brand new property to take advantage of that.
And the general rule is with deposits, it's the more you put down, the lower your interest will be.
That's right. It's not massive, but the more deposit you put down, the lower the interest rate is, the lower the repayments are. So it is important, if you can put that money down, by all means put it down. There are other ways like offset accounts. Have you heard of what
Yes.
offset accounts
Yeah.
are?
But please, explain.
Explain, yeah. So offset accounts are a separate transaction account that the bank opens for you. If you have any surplus money left over, you can put that into that account, and it reduces the interest you pay on your mortgage.
Yeah.
So someone like me being self-employed, I have money sitting there to pay my tax. I plonk it in my offset account, and I reduce how much interest I pay off my mortgage.
Right. But like once you have to like actually pay the tax, you can move it out, and then the rate will adjust itself.
Yeah, that's right. So once I have to pay the tax, I pay the tax, and how much I'm offsetting against my mortgage reduces. So the interest calculation starts going higher again.
Right. So it's basically like a more useful savings account.
Yeah,
Really.
that's right.
Okay.
Better to save 6.5% on your mortgage repayment than to earn 4%
on
on
a
savings.
account.
That's
yeah.
right.
And 4% is pretty high compared to like what's available in like
That's
Australian
right.
markets right
That's
now.
right. And you have to pay tax on that money that you earn
Yes.
with your savings as well.
So no point
they
at
get
all.
you everywhere.
Cool. So now, we've sort of figured out how to get into the property game. So now let's talk about the people who've bought their first house, and now they're sort of viewing this with an investment sort of lens. So now they want to get their first investment property. What's the move now? Because do you have to wait until you pay off your whole mortgage?
Yeah.
Like, will they even let you take another loan? What's the deal with that?
So as you pay down your mortgage, the balance is going down. Your property is also increasing in value. So let's say year on year, your property will raise between 5 to 10%. So that difference between the mortgage balance and the value of the home is what we call equity. So it's the difference of the value to the mortgage.
Yeah.
That starts to increase. So what you can do is you can leverage against that equity to purchase your next property. And that's how you see people that start accumulating property, buying 5, 10, 20. What they're doing is they're leveraging the equity from their existing property to purchase the next. So I would say the next step would be to contact your mortgage broker. We will order a valuation on your property, and we'll see how much equity you have in that. And after we know how much you have, we work out what your serviceability is. Based on your income, can you afford to purchase that second property?
Okay. And once you're looking for an investment property, is there anything different from what you would look for if you're just looking to live there?
Yeah, I would say if you're looking on the market, you want something that has high rental yield. I see a lot of people taking advantage of like dual living homes where they're renting out multiple rooms and getting higher rentals than a usual property. So people are getting very creative in this space where they're finding investment properties that are nearly paying their mortgages just by thinking outside the box with those properties. Like, for example, there's student accommodation.
Yeah.
Those types of avenues. And so like if people are scared they're going to be out of pocket a lot, there are certain assets you can get in that will give you good rental yield.
Right. And what do you think about this whole like Airbnb thing that people do?
Yeah.
Just buy a place and then just rent it out on Airbnb.
Yeah.
And oftentimes like the actual like per night rent is like much higher than what you'd get if you properly rent out the place. So what do you think about that whole thing?
I think it's awesome. Like for investors, I think if you've got the perfect property and it's giving you that rental income, by all means do that. I know lenders don't like the holiday letting because it's so cyclical. So what a lot of them don't like to use it, or they'll shade down a lot of the income that they use when they're calculating how much you can borrow. But from a returns perspective, I think it's great to take advantage of it.
Awesome. So when we sort of zoom out and look at real estate investments as in a big picture sort of way, what is the ultimate goal? Because a lot of people say it's just to replace your income with just the rental income from all these places. But other people say it's like get to a, you know, a certain net worth, and then you can sell stuff off and then use that money somewhere else and live off that interest. Like there's so many different ways that people look at it. For you, what is the smartest eventual outcome of real estate investing?
I think diversify is really important, not just through real estate. I think you want to diversify your investments, because if something does drop, you've got other things to prop you up. And two areas in real estate investment, you want to gain as much equity as possible, because one day when you do sell that property, you're going to come into a lot of cash for retirement. Or the second thing a lot of people do is they try to hold their assets, and it will give them rental income. So if you can retire and you've got properties making you money, that's your retirement fund right there, making returns for you. A lot of people are taking advantage of self-managed super funds as well, purchasing property in there, which I think is a really good strategy.
Oh, with their super fund?
Yeah, with the super fund. So that's another strategy that people are taking, is if they don't have enough deposit themselves, they're dipping into the super fund, and they're using their super fund as their deposit to purchase a property in the super fund.
Okay.
Yeah. You can't live in that property. It's solely for investment purposes, but that's another good strategy to get into the property game if you can't do it the normal route.
Awesome. So what you're saying is basically, a lot of people out there think that the way you generate wealth from real estate is just to buy a place and then just sit and wait until it appreciates. So that is not the case, obviously.
Yeah.
So in your experience, like, what are some other creative ways that you've seen people sort of generate wealth with real estate investing?
I think, like I was saying before, the room rentals, where you don't just have a family rent out the room, you rent out the house, you rent out per room. That's a good strategy. Refinancing. So refinancing every couple of years to make sure you're on the best interest rate will help you pay down your loan quicker.
Gotcha.
The quicker you pay down the loan, the more rental income you'll get, or the less your repayments will be. Not as much now, but people were taking advantage of cashback offers. Like banks were throwing money at you to refinance your mortgage.
Right.
So that was a good strategy. People were taking too much advantage of it, to be honest. But they were just refinancing every year, getting 4,000 at a time.
Yeah.
So that's, if it is out there, it is a good strategy to take advantage of.
Right.
Which helps you pay down that loan much quicker.
Yeah. And speaking of paying down the loan much quicker, what are like your mortgage broker tips to pay down your mortgage faster?
Yeah.
Because we've seen cases of mortgages just lasting people's whole life, and that doesn't sound ideal. So how do you really tackle this big mortgage that you've now got?
I think take advantage of the offset is one strategy. If you have surplus money, make sure it's not just sitting in a random account. Put it in the offset, which means that you'll pay your loan off quicker than 30 years. That's one recommendation. The second is make your payments either weekly or fortnightly. What that does is it pays off your loan quicker. The compounding interest and the repayment cycle makes it that you're actually paying off your loan quicker. And I think they've done studies where it actually shaves years off your mortgage by doing that. That's another strategy. And be on top of the interest rates. Always ask the bank to review your rates, or if you've got a mortgage broker, ask your mortgage broker what other rates are out there and to review it. The more on top of it you are, the less interest you'll pay and the quicker you'll pay off your mortgage.
Awesome. And I guess to sort of, sum it all up, like all this stuff can be made much easier by contacting your mortgage broker. But how do we know who is a good mortgage broker versus who is not such a good mortgage broker?
Yeah, I think recommendation is big. A lot of people like to go out there and ask for referrals to people. Recommendation is very big. Look at their presence, social media, Google reviews, things like that. You'll see the content they've got online, and you'll be able to read that person straight away. And you want a mortgage broker that's contactable. So whether you deal with them, you want to see how quickly they move, whether they have a team behind them that always keeps you in contact. So I think they're the three things that are really important to look for in that mortgage broker, which will ensure that you can have that relationship And always just know you can pick up the phone to the mortgage broker and they can review whatever you're looking to do.
Perfect. And I guess that's what you're trying to build here at Tora. So now I'm really curious. What's on the cards for Tora's future, and what's your big vision with this place?
I think it's to grow the team. Grow the team. It's been 2.5 years, and our team's already grown to 6, so we're growing very quickly. And I think it's to spread out throughout Australia with different products. We want to come out. We've got some big things on the cards coming up. So
Yep.
different products, different programs to use. So happy to give you a bit more information of that in the future.
Awesome. Well, I'm looking forward to it, man. Look, it was such a joy chatting. It was so much fun, so informational actually. Like a lot of these tiny little details I had no idea of, and I'm sure a lot of people watching would probably had no idea of. So thank you so much for taking the time to speak to us. And just as a quick plug, a good mortgage broker is very easily contactable. So where can people find you? Where can they reach you?
Yep, you can find me at www.torafinance.com.au, or you can contact our office by Googling us.
Perfect. Awesome. Well, thank you guys for watching, and I will see you in the next episode.